Good morning, traders. How's everybody doing today so far? Hopefully, doing pretty well. So, good morning. Thanks for tuning in. We got just two stocks on the watch list. I'm sure we're going to cover more, but those are really only two stocks that particularly like more than a couple others. So Disney's got some pretty good news this morning, and there's a few others that are moving, but I'm just not quite sure if I'm really going to pay attention to them too hard. Buenos dias. Good morning. Good morning, bro. Good morning, Manny. Good morning, Richie and Ignacio. So hopefully we got a good day on our hands. We have Disney, which is pretty interesting. Disney ended up releasing that they're doing their streaming service, and it's going to be priced at about $6.99. Stocks are ripping. Market ripped this morning as well, so interesting. I figured a lot of people will ask about VTL. Yeah, VTL's up really big this morning. You could watch it. I was actually very surprised to see VTL up this morning. It's not very often that we get a penny stock. Sub penny stock. Let me say that a penny stock below $1, break above $1. Doesn't happen very often. So the fact that it did happen makes it a little bit interesting. Still, I may trade VTL. I can already see my instincts and gut feeling tell me I probably won't trade VTL today, but we'll see. You never know. So yeah, we'll cover VTL and kind of walk you guys through what's going on there. Again, I mean, maybe it goes on another run, maybe it doesn't, but I myself, not personally crazy about it. Thank you, Nancy. I love that you love my channel. Thank you. So we're going to get into it. Let me grab the screen share. Just going to wait just a little bit here so that we can get some more people in here, let it populate a little bit more. All right. So we'll get into screen share here. All right, so here we are. So yeah, we'll talk about VTL. It just happens to be on the screen. What's going on LY? So anyways, I guess we'll start from a yearly chart and give you guys the whole background. I don't know. Vital Therapy, it's a therapeutic company. All right, so the stock crashed, which means at this current moment in time, they probably, I don't know for sure what happened back here, but I can go on the assumption that, this company had some type of important study or trial or something going on, something that was in the pipelines that was their most desired product, or it was going to be kind of the one thing that really pushed the company to new heights. And when it failed, the stock just completely tanked. So it has this massive gap down. I don't expect that VTL is going up to 6, right? It's most likely not going to fill this gap, or at least anytime soon. That's a really dramatic gap. On a side note, we have this 200 moving average, purple line, coming into a price of about 170. So typically, the 200 moving average on a daily chart, as you see here, typically holds a really good resistance for a stock. We didn't quite reach it. We only got up to a high of 138 this morning, but let's say for whatever reason, VTL turns around and it ends up ripping. Chances are it's going to, if it gets to 170, it's going to end up kind of, it's going to hit resistance at 170. So with that being said, I think if you do watch or do trade VTL and it ends up having a really good day, pay attention to that 170 mark, as it's definitely a good resistance point. Ben, every once in a while I'll do some options, but primarily day trade. I just never fully dove into options, but I understand them a little bit. And, I don't do spread trading. I don't do much strategy trading with options. It's just something I don't know enough to do extremely successfully, so I don't really do that. But we are bringing somebody on to we are bringing on a new team trader to Boiler Room Trading, who's been trading options for maybe 10 plus years. So he has a really, really great understanding of that. He's actually going to be one of our new team admins. working with boiler room trading. And so that's coming May 1st, end of this month, starting. Yeah. So I'll probably pick up a little bit more in terms of options from him. So I should probably learn a bit more about that field in the coming year or so. But yeah, so VTL pre-market just rolled over big time. Again, this is nothing that surprises me. So don't expect VTL to be some like crazy big 5, 6, 7 point runner. It's just probably not going to do that, right? And I didn't double check, but if I were to go to FinViz right now, just do a quick glance at the company, some of their information, I can say that it's probably not. Doesn't have the yeah. Doesn't even tell us share float on FinViz. Short float doesn't tell us. And outstanding shares is 17 million, so it doesn't have the characteristics of a big runner. So yeah, I mean, you can follow VTL. Again, as I said, I probably won't trade it. Really, this big move happened pre-market. Now it's down to the 200 moving average pre-market, so this is probably going to bounce a little bit as you're seeing already. So with the way it's moving, let me just point this out. I mean, I can be as clear as I can here. Your pre-market high is here, so we already know intraday. This is intraday. This is your resistance. Until it bounces pre-market, right? Until it actually comes down and bounces successfully, you don't truly have, a really good pre-market support level. You might be able to get one, and then high days from yesterday are so low from where we're at currently that there's really, in theory, this is support back here. So until we put in a bounce level pre-market today, we don't successfully have too great of a support system or a potential support system going into the intraday trade right now. So at this going rate with the way it's moving, the only thing that I really see in terms of a long play is just a bounce trade pre-market. And then once that happens, it's on to the open bell, which means if we drop, we bounce, it's more likely to drop out of the gate. So myself personally probably won't be trading VTL today. 1 second. Going up some questions here. Just give me a second. YRV. I think I seen it. YRIV. I think I seen it the other day. Wasn't too crazy about it. Yeah, I mean, pretty dead on volume there. Yeah, really not much going on. Yeah, probably won't trade that. What's up with the SPY crash? Who would be calling right now? Spammer. What's going on with the market crash? So, wait, where'd that question go? So, really, in regards to them, in order for a market to crash, there has to be something super significant happen. It has to pop. So, we went through a really good correction, and now we're kind of bouncing back up. I mean, it is inevitable. The market is going to come down at some point. I thought it would be within 2018. I was correct to a certain extent, but not fully correct on a full-blown recession. We still haven't received that. And it's interesting because, the Fed comes out and says that the economy's slowing, and then you get a bunch of analysts come out and said that we don't think. It's just like, the Federal Reserve literally came out and said the economy and GDP is going to slow. So at that going rate, they're already telling you that things are slowing down. And it's really just a matter of time. But we'll see. I mean, if they keep interest rates low, things like that do stimulate the economy. But it creates bubbles. It really does. They have a certain job and they have a certain role. I get it. But the most important thing you can always do for any marketplace is let the consumers make the market. When you put a middleman in there, right? Like, for example, let's say I want to buy lemonade from your lemonade stand, okay? And then somebody else steps in and middlemans and goes, well, based on this and based on that, I think you should put this interest rate or whatever in your cup of lemonade without letting you make the decision yourself. By doing so, it's an intervention. They're intervening between the buyer and the seller, and they're messing up the true market price. Okay, you should always let the market find its equilibrium. If anybody's ever studied economics, it's like one of the key basic things they teach you in economics is no matter what, the market will always find equilibrium, because people will always know when something is either too high or too low, right? And they'll take advantage of the low price before the seller realizes that it's too low, and they bring the price back up, and the seller will take the price too high and no one will buy, and then it comes back down, and it's called the equilibrium. You should look up the equilibrium scale. And that's what we should have going on in the marketplace. But when you intervene and you manipulate interest rates to try and control, then you create bubbles, right? And things get overpriced, which they are right now. So, whether or not the market comes down today, tomorrow, it really doesn't matter. So the number one thing you ask yourself in a situation like the market is right now is you just ask yourself, are things at good prices? Are things good deals? Are stocks good deals? And they're really just not, right? They're really not good deals right now. So, at the end of the day, I don't like the prices of stocks right now. That's why as I said before, I've taken my foot off the investing gas pedal, and just kind of slowed things down personally. But time will tell. So you just keep trading and doing your thing, and making your money. And as time prevails, you'll see stocks will eventually come down. It can only last for so long. And the other thing too, you have to understand is the baby boomer group, right? The baby boomer group is a massive population group that, in this current moment in time, relatively speaking, they're all within retirement age. Without a doubt. They've all reached the age of either retiring, thinking about retiring, soon to retire, and in doing so, what they're going to do. So you have to understand how investing works. Actually, as you get older, the safe route of investing is to, and I know we might be going a little off topic from stocks, but I got to go now because you guys kind of got me on this with the whole SPY thing. So when it comes to in long-term investing, ideally, as you're younger, like myself, you want to be more aggressive because you can take on the risk since you have longer period of time. And as you get older, you want to take on less risk and become more conservative. That is the safe approach, so that you don't lose your shirt and don't lose your retirement money from too aggressive investing styles. So as the baby boomer group, biggest population group, gets older, they move out of stocks, they move out of less aggressive, they move out of, and own less stocks. So they start selling off stock and moving into a more conservative portfolio, which would comprise of like bonds, some ETFs, and nowadays, and things like that, which means you should see some stocks sell off, right? And as the baby boomer group does in fact retire, they're going to start selling off more of those stocks, right? So there should be, and so that what we have too coming, I just told you guys the next big economic shift, and that's how you get onto trends. So in the future, we're going to have a really big economic shift, and it's really not too far out, because once you have the biggest population, which is the baby boomer group, right? This is kind of how it worked. As the baby boomers grew up, there was a massive demand for new homes, and there was a massive demand for schools, because all the baby boomers had, there's tons of baby boomers, tons of kids growing up. So there was a high demand for schools. And then when those baby boomers got older, there was a high demand for new homes, right? And back when the baby boomers came alive, there was a high demand for, diapers and baby products, right? So as the biggest population group moves through the world, they leave a trail, right? They need something, and then they leave something. So right now, the baby boomer group is in need of healthcare, doctors, and health supplies as they get older, which I was on back in 2012 maybe. Yeah, I started hopping on healthcare back in 2012, right? And so as the baby boomer group goes through this time, right, they leave a trail. So now within the future, we should see home prices decrease too, just because the baby boomer group, unfortunately to say, I hope this doesn't sound, too morbid here, but they're going to die, right? We're all going to die, and they're going to die off, and they're going to leave a trail of homes. There's going to be a greater supply of homes than there are people to fill them, because the biggest population group just dropped off the face of the earth. And nowadays, The birth rate has dropped dramatically. That's going to be, I believe, one of the next economic shifts is in today's day and age. I mean, I'm not even thinking, I'm 25, almost 26. I'm not thinking of having any kids yet. I hope not. I mean, I hope I don't have a little Connor running around out there. That would be bad. So I don't even think about having kids right now. Maybe when I'm 30, maybe, I don't know. I really don't know. All right. My mom had kids when she was like 20, and that's what was going on. So the birth rate's dropping dramatically in this country, and family households are having less kids. And if that's the case, then there's going to be less kids in the future, meaning there'll be less need for as many schools, and there would be less need for as much homes, right? And so if you take this big population group that needed all that, so we created the infrastructure for schools and homes, and then, fast forward another 60 or so, 70, 80 years, the birth rate decreased 3 times what it was. Now we're going to have an oversupply of all this infrastructure that we built for the baby boomer group. So in my mind, that's kind of one of our next economic big shifts we might be seeing. So in regards to what you're asking, the biggest population group is soon to be retiring fully and dying and selling off some of those stocks. So you don't have as much aggressive buying into the market buying should slow in theory. All right. So let me go over the other 2 stocks. Let me do this real fast. So Disney is one, and then I'll go through the questions here. All right, so Disney ended up getting news this morning. Well, we already knew that Disney was going to be coming out with their streaming service, but it just kind of hit the wire today that Disney is going to be doing their streaming service for $6.99 a month, which absolutely destroys Netflix's price. So if you look at Netflix today, Netflix's stock did decrease pre-market. I haven't looked at it for like 20, 25 minutes, so I don't know what it looks like exactly right now, but Disney is skyrocketing this morning from 116 up to 125. This is the type of position you ever heard where you buy the rumor, sell the news. We already knew Disney was coming out with a streaming service, but today it hit the wire of their pricing and a little bit more information on it. So we can't expect that there was investors early on that anticipated that this would eventually happen, and they're starting to sell into this move. So I think early morning, I want to say we see a pullback. Unless the pullback happens pre-market, then I think we bounce out of the gate. So really just watch right now for a little bit of a sell-off, because this isn't anything that we didn't see coming, right? I mean, people kind of knew this was going to happen with Disney. So I think we might see a little bit of a sell-off, but the news is really strong, and hopefully it brings in enough buyers and we can still catapult Disney's price a little bit higher over this new 52-week high of 124. Mm-hmm. So we'll watch Disney today. We'll watch it. We'll pay close attention to it. I would love to see Disney have a green day. I'm more on a bull side than a bear side. But I believe this might be a situation that has been buy the rumor, sell the news. So keep an eye on Disney today, but in the coming days, maybe follow it up for a short play. We should see some of these gains. The gains always get given back at some point. This created a big gap in the chart too. If we look at the chart, there will be a big gap here, and 90% of the time gaps are filled. So you might be able to watch for like a gap-filled short trade in maybe a couple days' time if it doesn't completely drop out the day, which I highly doubt it completely drops out the day considering the news is so strong. That's Disney for you. Okay. On to the next one, BBBY, and then I can go through some of the questions here. BBBY. So the only reason I'm watching BBBY is because yesterday it put up a really good fight and just would not give in. So I was thinking, well, the company's not really that great and all. We already know that. I mean, it's a brick and mortar store that personally isn't really doing all that great. Their earnings report even proved that. It said that they're I think it was like the second year of declining sales or something. But the way it's starting off pre-market, it has like this tiny curl. So in my head, I'm like, well, maybe BBBY rolls up today, and if it pushes this way, we could see a short squeeze over previous highs of yesterday, potentially. If it doesn't do that, I think today it might snap and give in, because yesterday it put up a fight, right? And maybe today is the day where we actually get a good intraday short play. There really wasn't any short plays there other than the pullbacks from the bullish spikes. So I think if we don't curl up and squeeze up, and there's still good volume on it today, we might either see a squeeze or we're going to see a rolling over short trade. So that's what I'm kind of focusing on there for BBBY. So you got a little bit of support here from yesterday, and then your resistance is up at like 18. So support 1750 intraday, arguably down to 1738, then previous low at 17, up to 18 resistance. All right, good stuff. Wow, wow. 1 second, guys. Let's see. What do we got going on here? Um, PHUN. I won't trade PHUN. Oh, by the way, guys, yeah, you might as well. I mean, I don't want to be the. I mean, definitely not. I'm definitely not a financial advisor. I shouldn't tell anybody to do anything with their trades. But me personally, I would not be holding PHUN, and I'm really not. I probably wouldn't even trade it. It doesn't have significant volume on the stock. The stock in itself doesn't have significant volume, and then two. They just filed to do a big direct offering of like, was it 7 million or was it 17 million? Yeah, I can't remember. I just read it not too long ago. They just registered to do a direct offering of like 7 million shares and 10.5 million warrants. So stock's going to crash most likely here. Is it today? I don't know. They filed. When they filed, that just means they filed, right? But that doesn't tell us when they're going to announce, right? So if you know better, you stay away. If you don't know better, you keep trading it and maybe you hold it and then maybe you get caught in the direct offering. And that's what you don't want to happen. So that's just it, right? Either you know that they're going to do a direct offering and you become very cautious, or you have no clue they even filed for a direct offering and you have no idea there's a cliff ahead, right? It's like a travel guide, right? The guy that walks the Grand Canyon. He knows where the Grand Canyon's at and he knows where the cliff's at. And he can go there in the dark and he can still be cautious and know exactly where the cliff starts. Whereas if you've never been to the Grand Canyon, it's completely pitch black outside and you don't have a tour guide, the likelihood or the chances of you falling over the edge are much greater than the guy who is a tour guide that's been doing it for a while. So they did file for a direct offering, so you should be very wary of the stock PHUN. It might do something similar to GLG or OPTT or MBOT. When they do a direct offering, they go crashing. So they did file for one. I think it was like 7 million direct shares and then like 10 million warrants or something. 1 second. Well, see, Ben, you don't really. See, that's the thing is everyone, when it comes to day trading, I mean, you don't. See, if your mind is so wrapped around day trading, then yeah, I mean, but you can trade without day trading, right? Because you could just buy a stock. You can swing trade, right? But then people are like, oh, well, it's swing trade. It's not. I mean, bottom line is you're trading, right? Like that's the most important thing. Is that it's not that you're day trading or is that you're trading. You're getting involved with the market, right? The pattern day trading rule is actually, it can be seen as bad. It can be seen as good. I've seen pattern day trading being unrestricted screw people, and being restricted help them because it keeps you from over trading. And over trading is one of the biggest problems that I've even faced, through trading at some points, and many people face. And it really does protect you. So you don't need unlimited trades to make money. All you got to do is be patient and buy at the right time, and you'll make money, right? You know what I mean? The easiest way to go about it, if you're under the PDT rule and you're just trading, some shares, the best thing to do is just wait till stocks have aggressively big sell-offs. They're in demand zones. Buy them and hold it for 2-3 weeks. Guarantee you're green. Literally, it's just you're not going to be making fast money, right? If you always tell your brain to make fast money, then you're going to be disappointed. But if you can be patient and wait for your play to turn out when you're invested, you'll make money. So it's going to take you some time before you can grow that capital to the point where you can make these in and out trades and make faster money. But you have to be willing to accept the process along the way. Yeah, Patrick. I mean, Netflix, Tesla, Baba, Costco, Restoration. Oh, they just had their earnings. Any of those. Bank earnings, I never play bank earnings. I don't even like bank stocks. They're usually shit traders, so I usually don't mess with them personally. Terrible now. You know what, AP? I totally respect your opinion. If I had no clue what I was talking about, I'm assuming that you wouldn't be here. Nah, I'm just kidding. Anyways, freedom of speech, bud. Have a good night or have a good day. I thank you once again for tuning in. By the way, AP, hit the like, share, subscribe button on your way out. You're right. I honestly, I've never traded a stock in my life. I have no clue what I'm doing. You're absolutely right. um, Hold on, I'm going through a couple questions here. DWP takeoff. No PNC. No PNC. VTL. You can watch VTL. I'm not crazy about it. Yeah, so anyways, guys, it's 9:01. Got to head back to the private group. So keep an eye on Disney. Be careful of PHUN. VTL, it might move today. It's been an interesting stock. It has been a one, but don't anticipate it to be a supernova stock. It's not. It doesn't have the characteristics of a supernova stock. BBBY is really just kind of on watch because of the earnings from yesterday. Maybe we get continuation up, or today is actually the breakdown to the downside. No problem. All right. You can get a hootie hoo. Hootie hoo! Good stuff. All right, guys. To get into our private room, it is the first link in the description of the video. So that takes you to our website. From there, you sign up, et cetera, et cetera, et cetera. You can get the point from there on out. But first link in the description is how you join into our private groups. Okay. With that being said, I will see you guys tomorrow morning, or not tomorrow morning, Saturday. I'll see you come Monday. Then have a great weekend. Stay green, and I'll see you on Monday.